Joining me now is Jordan Trimble, President and CEO at Skyharbour Resources. Great to see you again.
Great to be here. Looking forward to catching up.
Absolutely. Lots of news flow, lots to talk about. The last time we spoke was at a pre-PDAC a couple of months ago. So let's start with Russel Lake. You're in the midst of your biggest ever drilling program, 10,000 meters. Let's get some updates there on the developments.
Yeah, absolutely. So we're very, very happy with the progress we're making there. As we've talked about in the past, this is our co-flagship project along with the adjacent Moore Lake project, strategically situated the eastern side of the Athabasca Basin, just south of the McArthur River, largest, richest uranium mine in the world, owned and operated by Cameco, and then the Key Lake Mill to the south, Denison's Wheeler River project to the west. And most of the drilling that we've carried out thus far has been relatively close to the property border with Wheeler. Number of the main conductors and target areas, including the primary grayling zone target, which is where we're actually just getting back to drilling now in this third phase of drilling that we're just starting. Most of these conductors, these uraniferous conductors, are either extensions of conductors from Wheeler River or there's some relevancy with the geology and what Denison has on the adjacent project. So very happy with what we're seeing thus far. Lots of news that's going to come out from this program. So it's a 10,000 meter program. We're well into that. We have yet to announce results, so that we'll have batches of news releases and probably stagger the news flow over the coming months. But that's going to be a big catalyst and value driver for us and the shareholders of the results from this inaugural 10,000 meter program. We're already planning a program for later this year, given what we're seeing and just the ease at which we're able to drill at this project. Again, this has a lot of infrastructure, road, power, the exploration camp that we're inheriting from Rio Tinto as a part of our earn-in at the project brings our drill costs down. We can drill it all year round, so it's a great project logistically. But we're out there looking to deliver a new major discovery. We're, like I said, again, very, very happy with what we're seeing thus far. And just a quick recap on the strategy at the project. It's a property that's had a fair bit of historical exploration and some notable multi-percent high-grade mineralization in some of the previous drilling. But a lot of the drilling was widely spaced, multi-hundred meter drill fences that were widely spaced, and we feel that there's a lot of potential by systematically infill drilling, and so that's what we're doing here, and as well as some regional work outside of the main target areas. It's a project that we'll likely be continuing to work on for several years, and again, very excited to be entering in this next phase of drilling, and again, keep an eye out for news flow.
Absolutely, great stuff. Now, you mentioned Denison, longtime shareholder, partner of yours. You struck a deal to buy the South Dufferin property. This gives you more than 500,000 hectares basically in the basin. So what are the highlights here?
Yeah, so it's a project that we acquired from them, just actually closed on it in the last few days, but announced it in late April. So South Dufferin's a project in an area of the basin, the south central part of the basin. It's on the Virgin River Shear Zone and major regional structure that is host to the Centennial deposit, high-grade uranium deposit owned by Cameco, which is on trend to the north. It's an area we did not have much exposure to. We have properties, you said, we have over 500,000 hectares of projects, 24 projects in the Athabasca Basin. So we've really made it our mission to have exposure to every sub-region of the basin, right? This south central part where South Dufferin is, we did not have many claims there, and so this was a project that we were interested in acquiring. There's also a bit of a history on the project. RCTV Resources was a company. It was actually acquired by Denison Mines. It was run by our geological team, and so RCTV had this project previously, and they did some work on there. So our geological team very much likes the asset, and Denison did some good work there, did some drilling there in the last 5 to 6 years, and they're laser focused on developing Wheeler and developing Phoenix, and so We were able to strike a deal with them, and it was mostly shares that we issued, a little bit of cash, so a good deal. We acquire 100% of it, and it'll fit very nicely into our prospect generator portfolio of projects. We're with all the deals that we've announced in the prospect generator side of the business, we're starting to run low on drill-ready properties. We've got lots of properties, lots of inventory, but we've optioned a lot of the drill-ready projects. So this is a drill-ready exploration project that we will look to now turn around and option or farm out to another company.
Now, you've talked, and you're talking about it here as well, that your prospect generator model, that bucket, that part of the business. So as part of that, you've optioned up to potentially 100% of the South Falcon property, North Shore Energy Metals. That gives you 8 partners now. And this deal could be worth as much as a little bit more than $15 million. So can you take us through that one?
Yeah, so that was just announced a few days ago as well, a deal we'd been working on for what's called the South Falcon project. It's actually the western part of the broader South Falcon Point project, which is the South Falcon East and then the South Falcon project. The South Falcon East is, the audience may remember, we optioned out late last year, closed on it earlier this year with Tisdale Energy. So that's a $22 million, potentially $22 million in project consideration, exploration expenditures, cash, and share issuances coming into Skyharbour. Tisdale's planning a drill program at that project, which is host to the Fraser Lakes Zone B deposit. So we had the remainder of the western block of the project and a couple of additional claims we had staked a few years ago that we grouped into what we're calling the South Falcon project. We've now optioned that to North Shore. It's a new company going public. Very, very reputable, well-known management team that's coming in to run it. They're just closing on a qualifying transaction, and then the deal will be complete. And as you pointed out, there's an initial 80% earn-in, which is about just over $5 million in total project consideration. So expenditures, their funding, cash and share payments coming into Skyharbour. But then there's an option for them to buy out 100% by spending another $10 million cash and share payments coming into Skyharbour. First things first, for them to get to work. We're expecting both North Shore and Tisdale, given the two projects are adjacent to each other. There's potential synergies there, operational synergies, and so we're expecting both of these companies will likely be carrying out exploration and drill programs in the next 12 months. The great thing with that property too is it's fully permitted for drilling. So once the money's raised, they can get right to work there. And again, this will just add to the news flow. We've got the 8 partner companies now. We're now in total project consideration across all of these 8 option agreements. It's over $85 million in exploration expenditures, cash, and share payments potentially coming into Skyharbour as a part of these 8 option agreements. 2 of them now have converted to joint ventures. They've completed their requirements earn in, but there's still 6 in a very large portion of that total $85 million that is yet to be spent. So, and again, this is assuming that they all complete their earn-ins. But it's a great complement to the main focus, which is at Russel, the 10,000 meters, as well at Moore Lake.
Right.
We've just commissioned a 43101 resource estimate as well. And we are planning some drilling there later this year in conjunction with continued drilling at Russel Lake.
You are a deal maker. I don't know how you keep it. I'll keep track of it all. All right, so back to these partnerships. Let's focus on Azincourt and Basin Uranium. I know they're drilling. You've got some results. So what's the latest there?
Yeah, so Azincourt completed a 3,000-meter drill program earlier this year. Assays pending at the East Preston project. They've done a fantastic job advancing that project. Relatively shallow targets. They're starting to intersect mineralization, as we saw in the previous program, so they're on to something there. Basin Uranium completed well over 6,000 meters of drilling in 2022. A great first shot, first couple of phases of drilling at the Man Lake project. They still have a bit of money that needs to be spent on the project in the next year, 12 to 18 months, so we are expecting that they will be following up with some more drilling and some more work later this year or in the new year. And then, as I pointed out earlier, Tisdale and now North Shore, we're expecting programs from them in the next 12 months or so. And then as well, at our Yurchison project, Madero Mining has work commitments and requirements that they have to fulfill in the next year, and so we could see 4 to 5 programs from these funded by these partner companies in the next 12 to 18 months to add to the news flow.
Jordan, let's wrap it up with your big picture view of uranium. We know commodities in general are kind of in the dumps right now, to put it mildly. And yet we have talked about how uranium is in a unique position and with a lot of tailwinds. So what's your thought on the uranium market right now?
Yeah, so I think the biggest talking point right now, and this is probably true of a number of commodities, but I very much is the case, and probably one of the most extreme cases that I've seen in 10 years in this space is the disconnect between the commodity price, the metal price, which is now marching north of $55 a pound, and the equity prices and valuations. Like it's extreme right now. And there were times when, the companies were cheap, the equity prices and valuations were down, but the uranium price was in the mid-20s. It wasn't at $55 a pound. So there is, in my mind, a very, very strong re-rate potential here. We're starting to see it a little bit even in the last few days. We're seasonally right now, summertime, it's obviously a bit slower. The market can be a bit anemic, but I think there's an incredible opportunity. I've continued to purchase shares in the open market. I think this disconnect is going to dissipate in the next few months here. And as far as the market's concerned, look, the uranium thesis is playing out. It's everything that we want to see happen is happening right now. We're finally getting this supply-demand imbalance working its way into the market, putting upward pressure on the price. There's still a major structural supply deficit that's formed. We're running, the secondary supplies and stockpiles that have met that imbalance and that deficit, those are dwindling. The big thing this year so far, we've seen major volume, pretty significant volumes of contracting, well over 110 million pounds of material contracted to date. Last year, for the full year, it was about 120 to 125 million. So we're going to, I think, well surpass that. And the big number there to look at is 180 million pounds of contracting volume in a year, which is the replacement rate. Whenever you're above that, typically it's associated with higher moves in the price of uranium. And just, the market's continuing to bifurcate. That's one of the things catalysts we're seeing right now in the market is finally headway being made on some of this legislation that would put sanctions on Russian uranium and Russian nuclear fuel. One of the bills that would ban imports of Russian uranium and buying of Russian uranium from U.S. nuclear utilities from 2028 on, that just finally got the congressional committee approval it needed to get, and that'll likely be ratified here, and we'll see that work its way into the market. Basically, what that will amount to is Western utilities, U.S. utilities, having to source more material from Western suppliers and not be so heavily reliant on Russia. And so there's a lot of, there's a confluence of factors right now, positive developments and catalysts and factors that are driving the uranium price higher. As we're seeing it actually tick higher, march higher. The equities have been lagging, but I do think that we will see that close here in the coming months. And it's an exciting time, obviously, as a company. Lots of news flow, very catalyst-rich story. There's an incredible value proposition and opportunity right now for us and a lot of our peers as well.
Right, and we'll watch and wait to see the equities catch up to the price of uranium.
Absolutely.
All right, great stuff as always. Thanks, Jordan.
Good seeing you. Thank you.
Okay, Jordan Trimble, President and CEO, Skyharbour Resources.